And Titan is one of the stocks on our radar. In line set of numbers, and the revenue beat was pretty much led by sales of gold ingots worth over 1,055 crores. So the jewelry business has done very well, and there was a mild miss in margins, but nothing really to complain. Ashok Sonthalia, the Chief Financial Officer at Titan, joins us now to talk about that. Mr. Sonthalia, good morning, and thank you for joining us on CNBC-TV18. I want to understand, the jewelry business, despite all the challenges, has been growing very well. And I remember you telling us that you're gaining a large part of the unorganized market share as well. After COVID, there's, that big shift that has happened from unorganized to organized, so that you're a beneficiary of that. But in FY24, what kind of realistic growth do you see for the jewelry business, and what could the market share be?
So FY24 started initially with the gold price, volatility and spike. The initial 2 weeks of April were slightly soft, but as the festive Akshaya Tritiya started coming in, we have seen consumer coming out in big number and making good purchase. On jewelry, several things are working for us. Apart from the major flagship brand Tanishq, Mia is doing extremely well. Carrot Lane is doing well. Our international foray in jewelry is ramping up extremely well. So we are very, very hopeful and positive about overall FY24 performance, and in line with whatever we talked about our long-term goal. If you remember in the last annual investor meeting, we have talked about 2.5 times in 5 years. I think we are on track of that.
All right. Hi, good morning, Mr. Sonthalia. Well, the stock is up with a gain of around 1% odd, so the street is considering whatever kind of pressures is one-off, and they're looking ahead. Give us a couple of numbers on the jewelry business. We have the EBIT margins. You're guiding for around 12.5% to around 13%. But what kind of revenue growth are you looking at? Point number one. And point number two, studded share has moved to northward of around 30%, but it's still not at those levels of high 30s. Where do you see this number stabilizing? So revenue growth as well as studded share. Go ahead.
So, if you really look at our FY27 ambition, and when we say we are on track to kind of deliver that, it is definitely high teen number we are talking about in jewelry segment overall, including our overseas foray. As far as margins are concerned, we have been talking about 12 to 13% is a reasonable operating profit band. And if we are kind of giving growth a priority and delivering at this level of margin in spite of whatever competitive intensity is there in the domestic market, I think it would be worth pursuing that kind of operating philosophy, that growth at a stable margin. As far as your studded question is concerned, while it is always good for us from the margin perspective to have higher studded mix in the overall thing, but we run all these segments pretty independently. There are teams, there are strategies, there are tactics to keep growing them. And generally, then these are outcome, but we would certainly, the focus, certain strategy is around high value studded segment. The whole premiumization strategy and the story in India is giving good traction to studded market. And we kind of leading from front.
What numbers, sir? What numbers should we work with as a range from studded?
Don't know actually, Nigel and Prashant and Sonia, we don't know that what number we will finally end up with.
Okay. I think in February when you had spoken with us, Mr. Sonthalia, good morning, you'd said that it should go to 30%, but no timeline. I mean, eventually the aim is to get it to about a third of the overall business. I just want to come back to that margin point, Mr. Sonthalia. So the guidance is there. The FY23 margins were about 13.7. What is the, you commented on some commission structure change with franchisees. Would that not lead to a boost to margins? Or that is a one-off thing and not kind of structural in nature?
So 13.7% we talked about, Prashant, that it has one-off in FY23. Some gains sitting on our decision to buy diamond in advance, and after that diamond prices really went up. So we were sitting on a stock which was slightly lower cost, and we were getting that gain. Now that has got normalized since Q4. and now the buying strategy has got normalized. So studded segment has returned back to the normal margin. We had some custom duty related gain also, that was also one-off. So 12 to 13% sits there. That, if you adjust 13.7, then actually 12.7 was the normalized number for the. So that is where we are talking about 12 to 13%.
No, and what about the rejig in franchise commission? Yeah.
So I was coming to that. I think, this is a pretty operational decision. The last time when we kind of did some adjustment in this was about 12, 15 years back. And since then, our product portfolio, the markets, everything has gone tremendous change. And this adjustment which we undertook recently was just to align company objective, which categories which we want to pursue, which we want to grow, and is the terms of trades are also aligned to that and kind of supporting. At the end of it, there will be people who will be gaining out of this also, who are able to sell those categories as we want. And there might be a minor, but overall, if you look at in the retail sector, Tanishq jewelry franchisees get one of the finest return, one of the best return in the retail sector. They are just not complaining. They are eager to even come to us and even open more.
Got it.
Franchisees with us.
Franchisees, okay. So that's on the jewelry side. I wanted to understand a little more about the watches and wearables growth as well. What is a sustainable growth that you can look at? And I think earlier you had made some comments about how you're looking to double the revenues in watches and wearables over the next 3 years, and the target is 10,000 crores of revenues. Are you on track to do that?
We are certainly, and we are very enthused. This time we crossed the 5,000 crore milestone, which was an important milestone for the division. And the wearable market in India is exploding. And as I have talked to you earlier also, that the initial 2-3 years we didn't play that well, but for last 1 year we are really playing from front foot. We have the team, we have the products, we have our supply chain. We have our R&D centers around that working, innovation centers working very nicely. So I think, and now we are a recognized player. IDC ranks us, I think, 5th in the market. So that's a exploding segment. Fortunately for analog also, the premium journey is working very well, and we are progressing on that. Our international brands, the Titan premium brands are doing extremely well. Some minor challenges at the entry level of Sonata and low price Fast Track analog watch. Fast Track Smart is doing, again, extremely well. But Fast Track analog is not doing that well. The growth are softer. So, analog watch has its own trajectory on the premium side of it. Wearable has its explosive trajectory.
So, Mr. Sonthalia, Sure. Just coming back to the numbers, I mean, Nigel very helpfully tells me that the watches and wearables segment by the end of FY23, I think, did about 3,300 crores. You spoke about a 5,000 crore target. I assume that is by the end of FY24. And then when do you think you can achieve?
So Sonia, sorry to interrupt. There is a consumer price. 10,000 crore was a consumer price target. 5,000 crore we did in FY23. We crossed 5,000 as far as consumer price is concerned. But when we recognize the revenue in our books, then all those discounts are taken away from that number.
So what would the revenue, what would the revenues be? Because I think for our shareholders, right, or for your shareholders and our viewers, generally revenue estimates are looked at. So 3,300 crores is the base at which we are working with in FY23. So what are we looking at in FY24 and 25?
So you should also look at 10,000 target is the customer price target. Equivalent revenue target would be 6,100, 6,200 crore. So from that point of view, 3,300 crore is well on target to achieve that.
When do you go to the 6,100, sir?
That is FY26.
By 26. All right. Let's get a couple of other details on the smaller parts of your business. First, on CaratLane, as you said, growth there is very, very good. You have 72% stake. Any plans on hiking stake out there, if you could tell us? And also, on your eyewear business, which is growing quite well, last year you grew by around 30%. Any plans of unlocking some value? Because, the street is quite excited. Now we have a couple of brokerages as well that are giving a value to this business. On both these two, CaratLane, will you hike stake? And will you unlock value in the eyewear business?
So CaratLane, yes, you are right, is doing extremely well and growth trajectory, and they are also expanding their retail network quite aggressively, because we have found that the whole digital and retail omni combination works best, and that is what they are pursuing. We are pursuing that strategy in other parts of our businesses also, but CaratLane has been demonstrating that pretty well. As far as the stake increase is concerned, I think these are decisions which cannot be commented on, like unless the boards and the partners have come to some understanding, and we are obliged to then
But
inform.
Mr. Sonthalia,
We'll inform you guys through stock exchange rather than commenting on this channel, right?
Mr. Sonthalia, sorry for coming in, but is there a possibility that you go ahead and increase stake in this year? And also, if you could quickly comment about unlocking value in the eyewear business, which is growing very, very well.
So eyewear business is doing well. We have been talking about, they have sorted out their channel strategy, their supply chain, their profitability. They are pursuing growth. They had a very good network expansion. They added about 138 stores. We have been talking about 1,000 stores. So I think they will be reaching 1,000 store milestone during next 6-7 months. That's my guess is. They are already at 910-12 stores as we speak. I think eye care has a huge opportunity in front of them, and we don't have any plan to kind of take it out and monetize. Rather, keep it inside and then help increase value of overall Titan company. There is no plan to separately monetize eye care business.
Okay, all right, Mr. Sonthalia, thanks so much for stopping by and giving us, all of those details. Wishing you all the best for FY24.
Thank you.
But let's